In this video, we talk about the benefits and drawbacks of trading Forex outside of regular market hours. Whether you're a seasoned trader or just starting, understanding these pros and cons is essential for making informed decisions in the Forex market. Remember to watch the entire video. We also have several videos on the channel that we know you will surely enjoy. So watch them after watching this video. For everything else, free Forex courses, free Forex robots, free indicators, and the broker that I use personally, see the links in the description box below. Specifically, we'll be uncovering the pros and cons of trading outside of regular market hours. If you're looking to enhance your trading skills and strategies, you've come to the right place. Let's get started. So here are the pros of trading outside regular market hours. 1. Increased market opportunities. Imagine being able to trade while others sleep. The Forex market operates 24/5, spanning across various time zones. This means that when one market closes, another opens, providing you with continuous trading possibilities. Those late-night sessions might just lead to finding a hidden gem. With different regions overlapping, you can seize opportunities that might not be available during regular hours. 2. Reduced competition. Trading during peak hours can feel like a battle for pips, but step into the after hours and you'll find the competition dwindling. With fewer traders in the ring, spreads tighten, and slippage becomes less of a concern. A less crowded arena could mean smoother trades and potentially more profits for you. 3. Volatility opportunities. Economic announcements and news releases can send shockwaves through the Forex market. Trading outside regular hours lets you catch these waves even before the sun rises on the market. Whether it's the Asian session or the European one, reacting to news early can be your ticket to riding the volatility and making some impressive gains. Now let's turn to the cons so that you know what you will be getting yourself into. 1. Reduced liquidity. It's not all smooth sailing. Trading during off hours can sometimes feel like navigating a shallow river. Reduced liquidity means you might struggle to enter or exit trades without causing significant price shifts. Keep in mind that low liquidity could lead to wider spreads, slippage, and overall trading challenges. 2. Increased spreads. Picture this: wider spreads devouring your potential profits. During non-regular hours, those spreads can stretch like a rubber band, impacting your trading costs. Those seemingly minor differences in buy and sell prices can add up, affecting your bottom line. 3. Limited trading opportunities. Certain trading strategies thrive in the hustle and bustle of peak trading hours. Breakout traders, for instance, feast on the volatility during major session openings. But step into the after hours, and you might find those strategies less effective due to reduced volatility and liquidity. So, is trading Forex outside regular hours a wise move? Well, it's a double-edged sword. You've got increased market opportunities, reduced competition, and the chance to ride volatility's roller coaster. On the flip side, there's the risk of reduced liquidity, wider spreads, and limitations on certain strategies. Before you dive into the after-hours world of Forex, assess your trading style, risk tolerance, and the specific market conditions. Remember, knowledge is your most powerful trading asset. That wraps up our exploration of trading Forex outside regular market hours. If you found this video valuable, don't forget to hit the like button, subscribe, and ring that notification bell to stay updated on more insightful trading content.